Jessica David, and I am the co-founder and president of Local Return, which is a nonprofit organization in Rhode Island that was created about, over 3 years ago now during the pandemic with the mission of building community wealth in Rhode Island through community investment and community ownership. And so this topic is certainly right in our wheelhouse. And we do a number of things. We really have been focused since our founding on getting this community investment fund up and running, which I'll talk more about today. But we also, as Jen mentioned, work with her and other partners like Amanda and others on the call around promoting, the concept of local, buying local, eating local, staying local, all the things local, and the role that people can have in their local economy. And then we work with Lauren and other folks on some advocacy and policy issues. Although I will say we follow the lead of the pros on that, but trying to promote some of these concepts with our local leadership here and nationally as well. I am going to hopefully share my screen. We'll see how this goes. All right, are you all looking at my slide deck? Excellent. Give me 1 second because I've lost your faces and I want to bring those back. Okay, so today I am going to talk about, I'll do a kind of like brief intro just to who Local Return is and how we got into this. Talk about the Rhode Island Investment Cooperative, which is very, very soon to be official. You're all getting kind of top secret, almost real news. Go into some detail on the lessons we've learned, which have been many along the way. And then what I see as the key decision points when thinking about community investment funds. And please do feel free. I'm going to try to keep an eye on the chat, but I've got multiple screens and windows open. So Jen, feel free if there's things in there to flag them for me. But if I'm going in a direction folks don't want to go, or there's other things, feel free to chime in as we go along. But for Local Return, this is our mission. As I mentioned, we're a 501c3. We really were created with this vision that Rhode Island families and communities can control their own economic destiny. And we take this parallel view of both people and place. Like all of you, I'm sure, we think our places are very special and very each have their own assets and needs and leadership. And so we are really keeping our eyes on both community wealth as well as wealth generally. Our mission I talked about, we do focus on neighborhoods that have experienced disinvestment over decades, generations, who are dealing with extraction, with just neglect, but just haven't seen the kind of positive, productive investment come into their communities. Why do we do this? I think this slide kind of captures it all. Like many places, we just see gross inequality across places and across zip codes and communities. And these are 3 pairs of census tracts in Rhode Island that are basically, the first 2 are both part of Providence, second 2 are part of Newport, and then the last 2 are neighboring communities up in northern Rhode Island. And you can see the difference between, just from one area, literally, stepping foot into the next, what the population looks like, their income, poverty rate, diversity within those communities. And then, their chance, this data comes from the Opportunity Atlas. And so looking at the average income of a child who grew up in that community, what their household income would be at age 35. And it's, pretty radically different depending on where you are coming from. Here we go. So I think it's really important to ground the conversation in what we mean by community investment, because I think folks could certainly mean it in different ways, which I'm totally fine with. But for Local Return, this is the definition that we've taken, which is that it is place-based and it is place-specific. That community investment is about bringing money into places and sectors where the market does not go on its own. If there's already capital flowing into a place, that's not necessarily, there may be better ways to do it, but that's not necessarily where we're focusing. We're looking at how to bring money into places and people and issue areas where it's not going. We do think that community investment has to involve money. So there's a lot of capital. I am a big fan of all of the definitions of it. And I think they're all, assets that communities can use to build wealth, but, low-income communities and places need money. And so community investment, in our view, does have to involve financial capital. I think at its most basic level, community investment intends a local benefit. So there's a financial return, but there's also a social return. And that is for the people, the place, the environment. There's a lot of different ways of thinking about that benefit, and we'll talk a little bit more about that. And then importantly, it is also about minimizing negative impacts. So, as someone who I spent most of my career in philanthropy, and so I spent a lot of energy and time looking at how money lands in places. And there are a lot of unintended consequences and negative consequences sometimes when we bring investments into place. And so both what we do and also how we do it, we're really mindful of making sure we're not creating any negative impacts. We believe really strongly community investment should center control and accountability within that community and within that place as much as possible. And that also it should be not just building wealth in terms of financial capital, but also the capacity, knowledge, skills, strengths of members of the community along the way. So we have been spending, folks on this call know because you've been listening to me talk about this, but over 3 years, I think, we came together with the mission of really wanting to nurture and build community investment, and thought that was going to be a little easier than it has been, I will say. And so it's taken us several years to get to the point where we are this close to filing incorporation papers for the Rhode Island Community Investment Cooperative. And so it has been a very long and fascinating journey. And we have definitely learned some important things along the way. So I do have 2 disclaimers, which is one, I am not an expert. So I think enough to be dangerous. So please consult your financial, legal, tax experts before taking anything I say too seriously. Some of them are on the call and can probably know this stuff much better than I do. And the other thing I want to be really upfront about is, as I just said, we haven't officially launched yet. So we're building this thing as we are trying to get it off the ground. And so there's a lot of pieces that you may ask me and I might say, I don't know, or we haven't decided yet, or we're still kind of figuring that out. So I just want to be upfront about that in the beginning. So this is our investment thesis. And I want to give a shout out to NC3, National Coalition for Community Capital. Chris Miller is on the call. We really, what made this all feel possible for us was their community investment handbook, which some really smart folks put together, which does an excellent job of making the case for community investment, why it's necessary and should be possible, and also really starting to break down the nitty-gritty of how do you actually do this in your community. And so they also have a number of tools. I think the tools are still available. And one of the first exercises we went through as a group was, what's your investment thesis? How would you summarize what you're trying to do? So we are trying to raise $3.5 million to build community wealth in economically disadvantaged Rhode Island neighborhoods. I'm going to talk a little bit more about how we define that, by investing in place-based, locally owned, and community-driven real estate revitalization. And we think the sort of secret sauce to how we're going to do this is by engaging community investors, leveraging social capital, both our own and within the communities, and providing customized support to potential investees in order to build a strong pipeline of investments. And we've been really intentional about sort of every word in that investment thesis statement. And that's because we are here not just to create this fund, but to build the entire ecosystem around us. I think some places, community investment may have stronger ecosystems. Rhode Island has not been one of those places, and I suspect for some others on the call, that's probably also true. And so there is a bit of, it would be nice to maybe focus a little bit more narrowly, but we think we have to do a little bit of the seeding of the entire ecosystem as we go. So these are some of the just basic principles of what we're trying to accomplish with the investment cooperative. We felt it was really important. We wanted to offer both accredited investors, but also non-accredited investors. So your average community member, as well as people who are living in the neighborhoods that we are planning to invest in, the opportunity to invest. We had done some education when we first formed. We brought Michael Schumann to do some virtual workshops with Rhode Island. I think that was actually how I first met Jen. And actually found there was huge interest in it. People really wanted to invest. And at the end of the workshop series, we realized there really wasn't anything here for them to do unless they were going to go off and do a lot of due diligence and work on their own. And actually, we have a local investor on the call who has done that, but not everyone is in a place where they really can do that. And so that was part of the reason we felt that was what planted the seed for this community investment fund as what felt to us like the right solution for us to move forward on. And we also obviously, are here for the collective benefit of both the investors, the neighborhoods and places, and their residents. Oh, and I see a hand raised. Barbara.
Could you take just a minute to talk about how you are involving non-accredited investors?
Yeah, I'm actually going to do that.
It's really easy to do this with accredited investors. We can do what we darn well please with our money, right?
Yes. Do you mind if I come to that in just a minute?
Oh, sure.
Okay, I actually have a slide that I think will get at that.
Thanks.
But yeah, it's hard. And that is one of my big lessons learned for sure. And so this is the sweet spot we wanted to be in, is what we're calling possibility capital. So, we often talk about risk capital, but for us, we felt like the right framing was possibility capital. So we want this fund to help make things happen that wouldn't happen without it, or maybe will happen a little bit less painfully for the folks involved. So it's about, that kind of mission aligned, non-controlling financing that really just kind of smooths the way for some of these critical community infrastructure projects. And as I said, I borrowed a lot of this language, pieces of the language from the Kachua. I'm not sure if I'm saying that right. I always say it differently. Impact fund. So thanks to them. Okay, so here's where we get a little bit more specific, and we will be getting to the unaccredited investors. So we are taking the structure of a diversified community investment fund, and that really was presented to us by National Coalition for Community Capital as a way of forming a community investment opportunity that, I don't want to say skirts the law, securities laws, but does it in a way that makes it possible to do all the things we're trying to do without adding huge layers of additional regulation and requirements for us. And so the idea behind the diversified community investment fund is at least 60% of the investments of the fund have to be in real estate. The remaining 40% could be in businesses or related other ventures, but at least 60% have to be in real estate. And I will say, when NC3 came to us with this concept, we immediately felt like this was the right thing for us because we are so place-based, and we are focusing not just on individual businesses or individual households, people, but really on the places in which folks live. This felt like the right type of lens to take. It also, I will say, for Rhode Island, we were originally thinking more of a small business investment lens. There's a lot happening in Rhode Island around that. It's not all great, but it's a busy and complicated landscape. And we felt like this space actually was a lot less, there's just not nearly as much happening. And so it was a little bit, we were filling more of a gap here. So that was just another reason this made sense for us. Legally, we're going to be incorporating as a public benefit corporation in Rhode Island, but we're going to be acting very much like a cooperative. We actually wanted to form as a cooperative. It didn't make sense for us in Rhode Island, and this is where different states really do have different opportunities in different structures. But for us, forming as a corporation made the most sense in terms of what that will require from us reporting to investors, and also importantly, how investors will be reporting on their tax returns. We did not want to be making it so intimidating and onerous for our investors, since we were going to be including unaccredited investors who don't do a lot of this. But like I said, we're going to be acting very cooperative-like. So every investor will have a vote, no matter their financial commitment, one investor, one vote. And the investors will actually elect the board members. To start off, we're just starting with the same board as local return, but we're hoping within a year to have a full board complement. And then decisions will actually be made by an investment committee who will be, we're still finalizing exactly the details, but it'll be a majority of residents who live in the neighborhoods that we are prioritizing, have at least 2 owners of local independent businesses within those neighborhoods. It'll have at least 1 member of the local return board, just in order to keep that connection. But really, this is about, like I said, building the capacity of community members to really think about community investment and be able to use the language and have the skills and be thinking in this way and spreading that within the neighborhoods. And we borrowed this approach also from Kachua, but we've identified these as our sort of impact themes that we're looking to invest in. So, I think it's a little bit of everything but the kitchen sink, but it's pretty broad. And we did customize these for what we think the opportunities will be in Rhode Island. So there we go. So here we get to investor classes. So this gets at Barbara's question. So like I said, it was really important to us that we allow for unaccredited investors, and that made it incredibly complicated. We like to say at Local Return that we do everything the really hard way. And this is starting with this. So we are envisioning there will be a level of common stock, which will be the voting rights that every investor will get 1 share of common stock. And then we have 3 shares of preferred stock. So I think Series C, the sponsor members, that's where we're really looking at our institutions, could be philanthropic, could be corporate, very large accredited investors, thinking that that's probably going to be a $50,000 minimum investment, and they will get sort of a base level return. Community members, that's your everyday person. A lot of my peers, folks who we think can make a minimum $2,500 investment, and they will get a base plus return. And then our neighbor members, and that will be people who are residents in the communities that we have prioritized, as well as folks who are sort of self-attest as low income. So we want to make sure everyone has an opportunity to participate. There would be a $500 minimum to invest at that level, and they will get a base plus return. So their return will be slightly higher than community members, who will be slightly higher than our sponsor members. So we do feel that there needs to be a financial incentive, a financial return. This is a community investment fund, but we also feel like we are very clearly prioritizing those who this will be who don't have as many opportunities to participate in this kind of investment. And that's because while this is not going to be anyone's primary wealth building strategy, we do think this is an important way. And we've also had huge positive feedback from community members when we talk about this. People are excited to think that they and their neighbors, everyone will have an opportunity to invest and be part of it. So that was something that was really important to us. We're also looking at raising some philanthropy dollars as a reserve, just to be able to sort of cushion and allow for that. And we're still really playing around with financial models in terms of the exact amount that will be, but we think that is going to be important. So in terms of the types of investments we will make, we want to be pretty flexible because we don't really know. Well, I think we know enough to know that whatever we expect, something different will come in. And so we're looking at the ability to make loans. I suspect, at least in the beginning, a lot of it will be loans, but also we want the opportunity to make equity or equity-like investments. We think they're going to be in that $15,000 to $500,000 range, probably fewer on that high end. And again, it's for real estate projects or related ventures. So we love that the Diversified Community Investment Fund gives us the opportunity, if we're investing in a building on a main street or a commercial corridor, to also potentially provide maybe some working capital for businesses who are going to be located in that building or who are next door or across the street. And so that gives us some nice flexibility to do that. The three buckets of investments that we've been talking about, and there is some overlap here, but so far these three buckets have held together. The first is we really do want to invest in what I'm calling small scale first time real estate developers. So people in neighborhoods who, most of us are not born knowing how to do real estate development. My husband and I did a home renovation project over the summer, and I hope that is the only time I ever have to do anything with real estate. But it is a wealth building strategy for a lot of people, and traditionally in our communities, that is how people, often immigrant communities came here. They may have bought a 3-family, they may have bought the house next door, and so that ability to build a little cushion for your family and start to build some generational wealth for your family. We feel like that's important, and so we are actually working with a group called Jumpstart from Pennsylvania. They have, I believe, 8 different locations now. It started in Germantown. There's Jumpstart Philly. There's one in Wilmington, Delaware. And they do education for folks who might want to get into real estate but have no idea how to think about putting together a budget or working with a contractor, or is this a good deal, or am I going to get in trouble with this property? And they are fabulous. They have completely made their curriculum and materials open source. So we have a local group of folks who have been getting together to customize that to bring it into Providence, and hoping to pilot a program this fall in one of our neighborhoods in Providence. And then the idea is that the education program would be available. And then if folks graduates from that program come out and have a really good opportunity, that the fund could come alongside and provide some seed capital to them to help them take on their first real estate project. But feeling good that they have had the education and the training and mentoring and networking that go with the Jumpstart model. We also think that this fund will do some traditional, like what I call nonprofit driven community development. It's sort of the community infrastructure projects. We've had a few like food hubs that have been developed here in Rhode Island. I don't really see this as like the big, huge affordable housing project or the really complicated, with 12 different sources and tax credits and all of that. But what we're trying to really figure out is there a way that our fund could come in at a critical moment with some really flexible capital that just kind of greases the wheels and makes it a little bit easier for folks. What we hear is that could be pre-development money. It could be, some like even small dollar equity that just makes the different funding sources work a little bit better and easier, more towards the end of the fundraising process. So that's still, very much under development, but we do think that there'll be some investment there. And then the last category, again, shout out to Kachua for this. We're calling real estate destiny. And we hear a lot from small businesses who are renting and have put a lot of money into their space to customize it, have built out their space for their business. And then the rent gets jacked up, they get kicked out. The landlord's a jerk. The things are just not, they're not seeing a return on their investment, and they don't have that opportunity to build equity in that property and build wealth through it. And so we really think want to target a lot of the investments from this fund to help small businesses be in stable real estate situations and, take over ownership, whether that's immediately or, over a period of time to control their space. I'm getting done with the slides. Jen, tell me if I'm going too fast, too slow.
We're good. And again, feel free to chime in, folks, in the chat.
And that's a good
if you have any questions.
So look in the chat. Excellent. So just a few more details in terms of the investment types that we think we'll be making. these are the neighborhoods that we have prioritized. We're going by census tract because that's where we can get data, but we're also clear that we're not eliminating anything. So if it's like right over the line, it isn't in this census tract versus that one, we're not going to be a stickler about that. But we're looking at areas that have a very diverse population and have a poverty rate over 20%. Those are just kind of two easy data points we've used to prioritize place. Projects have to either maintain or create local ownership opportunities. So this is not about giving folks from outside Rhode Island a chance to come in, invest, even if it is, not a predatory investment. This is really about local control. Obviously, impact real estate or impact company, we've created some definitions around what each of those is, and it's pretty basic. It's like, you're creating positive impact, either how you're structured, how you do your work, and how you operate, or what you're actually doing and creating and producing in the world. Aligns with one of our impact themes. For real estate, those ideas that I already talked about. We do feel it's going to be very important for us in our process that applicants, one of the requirements is they're going to have to demonstrate in some way that they have the support of their community. So this is not about coming in and plopping down something that neighborhoods don't want, which we often do see in terms of real estate discussions here. So it's still a work in progress of how we make that happen, but it's an important principle for us. We are going to be taking some big risks with this fund. This is possibility capital, but we also want to see applicants that, maybe do not have the credit scores, they may not have the collateral, they may not have the decades of experience, but certainly that they have taken steps to attain the capacity and the knowledge, and they've really been committed to their own capacity to get the project done. And then we'll definitely be prioritizing projects that have shared ownership or governance. Like I said, we're trying to act like a cooperative. We'd love to see that in some of the projects we're investing in. Certainly if there's some shared services or benefits, and love the idea of kind of clustering some investments. Okay, so this is the fun part. So this is where I talk about all the things we've learned along the way. And again, like community investment funds, I think are also different. And so, the way that we're doing it is particularly unique, and you may not run into these and run into others. But for us, number one, it's really complicated. I cannot, and again, partly this is because the way we've chosen to do it and the priorities we've placed. But I just cannot say this enough. Like, it is hard. There's a reason that a lot of people don't do this. And so just be prepared for that going in. I really think it's important that there's a consistent group behind it. So we've had a core group of 4 to 6 board members who have really just gotten their hands dirty and shepherded this through. We absolutely want to add more board members. We've brought in community members for small conversations and tested out pieces, but there's a lot of education and sort of leveling that has to happen. And so every time, you bring this concept to a new group, you almost have to kind of start back again. And so I think having a consistent group who's going to own it and shepherd it is really key, as well as, certainly building champions and knowing when it's time to broaden that. So for us, we've been so focused on getting the legal structure set up and some of the operating structures. That feels like a critical moment to us to then start going much broader. Definitely don't do it alone. We've had so much help. And I have a slide on that. And many of those people are on this call, but just there are experts out there. And usually I just say to them, like, I don't want to end up in jail or arrested by the IRS, and just help us figure that out. And so definitely don't be afraid to lean on other models. I think for a long time, we and our groups wanted to find this perfect model that we thought was out there. And we were like, oh, it'll check all of our boxes. And it just wasn't like that for us. So we're taking things from Kachua, we're taking things from Ujima, we're taking things from some of the real estate cooperatives. But we've had to form our own perfect model. And so it took me some time to be okay with that. And I also think, every community is different, but I know when I go out and start talking to people hear, they're like, well, are you basing this on somewhere else? And so how you tell the story of the decisions you've made is really important. this is my mathematical analogy. To whatever extent you can, there's a lot of variables. Like there is the who's going to invest. There's the what you're going to invest in. There's how you're going to make decisions. There's your legal structure. There's how you talk about this. For a long time, I felt like we were in this spiral of doom, I kept calling it, where like anytime we tried to pull on one of these threads, we just came up with this huge knot. And so it was really important, and folks like NC3 and some of the other partners I'll mention in a minute helped us untangle that and figure out, because they're all of the variables are connected. And so you have to be really thoughtful about what are your deal breakers? What can you maybe sacrifice and be flexible on? But try not to get, if you get into that spiral, it can be very overwhelming. And I have to say, it can be a bit disheartening. And I understand why people walk away from this and say, like, I'm not going to persist in trying to make this happen. I've also found there's a real tendency here to like get distracted by the shiny new object. So there's like a fancy new platform or product, or there's this new thing called something. And so we should want to do that. I have learned to be, and some of those have actually been really helpful for us. And also I've learned to be kind of ruthless about, is this relevant to us? And if it's not, like maybe we get to that at some point in the future, but right now it's a distraction. And we just have to stay focused on what we have decided makes sense for our community and for our fund. And so I kind of wish I had known that beforehand when I let myself kind of go like, oh, okay, we're going to go down this road for a little while. We're going to go down this road. And just, it took valuable time. And then if I can leave you with one thing, it is this. Be really, to the extent that you can be as clear as possible about what you're trying to solve for. So for us, it really was about, we wanted accredited investors and unaccredited investors. We wanted that place lens. And we really wanted to be able to come in and provide that kind of like possibility, flexible, recognizing it's high risk capital. And we wanted a community governance structure. Those are not easy things to design for necessarily. Like it probably would be a lot more straightforward if that was not all true. If we had a broader, region, if we didn't have the community governance thing, if we were only raising from accredited investors. But to us, those were the important pieces. And so we had wonderful advisors who helped us design a fund around those deal breakers. And it means like we may be charging higher interest rates than we may want to. And, there are other sacrifices that you make along the way. But I strongly encourage you to get clear as early as you can about what those priorities are for you. Okay, shout out to all of our many wonderful partners who have helped us. And I want to especially mention NC3 really got us started and made us think that this was possible and got us connected with other folks around the country who are doing similar things. So thank you to Chris. PathLight Law, which used to be Cutting Edge Counsel, is our lawyer. We get a grant from our local community foundation to hire legal expertise. That's how I sleep at night, knowing that I'm not going to get in trouble. And then Capital Innovation Lab up in Vermont, Janice Shade has, I think, really helped us get out of that loop by figuring out how to make these things real. And also helped us translate some of the legalese where I can get a little bit lost and intimidated. They have helped us figure out like, okay, what does that mean? How does it apply? How are we going to make it work? Also, I put up here the Jumpstart folks, some other folks. We're in discussions with the SVX platform about using their platform in terms of our fundraising strategy. And then we brought in Michael Schumann. The right-hand corner is like my little group of guardian angels. I feel like Marjorie Kelly from the Democracy Cooperative is really the person who like first introduced me to these ideas. And then Jen, who has just been a cheerleader and connector and supporter all along the way. So there are definitely people out there. This is my last slide. I really wanted to do something for this presentation where I mapped out what I thought the steps were, because I thought, I wish I had had that. And I really tried for hours and couldn't do it. So this is the best I could come up with, which is starting with like, what are the problems you're trying to solve, as I talked about, being really clear on that. This next this first list of bullets here that starts with legal and governance, these are like the things we're trying to solve for in the design of the fund. So literally, these are the categories on my to-do list. These are the categories we put on every meeting agenda. And it's helped us stay focused on just the main pieces of work. And they are going to overlap and need to interact with each other and depend on one another. But I'm embarrassed to say how long it even took me to just come up with this list. So if it's helpful, share it with you all. And then on the right-hand side, these are the questions that I think were really key in our design and formation, like who do you want to participate? How are you going to make decisions? Really looking at what your market can accommodate. So for us, it would be great to raise more money, but we don't think that's a reasonable goal to start with. So we're starting with 3.5 million, which for some folks feels very small, but for us feels actually like a nice aspiration. The types of investments you want to make, how you're actually going to raise the funds. And I didn't mention this, but we are using a direct public offering strategy. So we did go back and forth between a DPO and a Reg CF. And our lawyers helped us really think this through. And I'll be honest, for us, it felt that the Reg CF has more restrictions on because you're supposed to really be working through the platforms and really directing people to what's on, those platforms. And we feel like a lot of this fundraising is going to happen face-to-face and one-on-one through relationships. And we were really nervous about just bumping up against doing something wrong with the platform. And so Rhode Island we've had 2 social ventures do direct public offerings. So we also felt like there was a little bit of both successful. So there was a strength to build on there. So again, those are just some of the questions to think through. And then this is my contact info. And as you can probably tell, I have had I love to talk about community investment and the lessons learned. So please don't hesitate to reach out. I think I should say, like when we first started talking to people about this in Rhode Island, we tried to get a lawyer locally and, worked through our networks, and people be like, why do you want to do this? That doesn't make any sense. And so it can be a lonely thing. And I think being able to draw on the peers that exist around the country are really important.
I think it's so important, Jessica, that you're willing to share your learning now. I think it's so easy to reach out to people after they feel like they've been successful and launched, and then they kind of forget all this. It's like childbirth. So thank you for being willing to chime in now. And I just wanted to acknowledge people's questions. Corey had asked, how are you able to keep those outside investors out? And that might be more of a question for, as Barbara chimed in, as you're successful, do you have anything already in place?
Yeah, it's a great question. So, and my original read on this question was into the fund. So we don't want to keep outside investors into the fund because we really need their money. So I should also mention that along with the direct public offering, we're doing Chris, correct me if I'm wrong, but I think it's a 506C offering so a direct public offering in Rhode Island, which will raise from accredited and unaccredited investors. And then a 506C in other states will allow us to raise from accredited investors in those places. And that's because Rhode Island's small and we feel like some of our residents are Florida, and there's a lot around that, and we feel like we have to. So yes, we will take their money and incorporate it into the fund and into our governance process. In terms of the neighborhoods, it's a great question, and I think we haven't really put in place mechanisms, to withstand that. I think that is something we will certainly be wrestling with. Part of me thinks, this is going to be a slow process, and so we'll have time to develop it. And part of me thinks, oh, it's going to happen so quickly that, we should be moving on this quickly. So it's a really great reminder. And just to be really candid, we haven't figured that out. We are by operating as in the structure that we would be able to assume ownership. So, there are other models like Kensington Corridor Trust, which is actually like buying up properties in order to take them off the speculative market. I would love to be able to get there. That'll depend on how quickly we can raise money and how much money comes in and things like that. But we made the decision to focus on Rhode Island broadly because we felt like that was the right thing for our market, with a concentration obviously in specific communities, but we didn't want to focus in just one city or town because we felt like the balance of raising money and expending money that made, and also the way people identify that made the most sense. But yeah, we would love to get to the point where we actually can act as a more proactive agent in some communities and hold properties. We also do have some partners that we could work with in this. So, there are some local land trusts that could take that on sooner too. So I'm sorry, Corey, to not have a better answer, but I appreciate the question.
And I think, Anne, we've hit most of your questions, but chime in if we missed any. And then Barbara had asked, will that be a maximum or just a starting point? You might have already addressed that as well.
Yeah, and I also, just to go back to the why 3.5, like this was definitely an art, not a science. We felt like we could raise 3.5. Anything above that felt a little too aggressive. And we felt like 3.5 was like a minimum level to do something meaningful with. And really test out some of these ideas. So it felt like kind of that sweet spot of like, it's aspirational, but it's doable, and it will allow us to see what works. So, and like, I could be totally wrong on that, but that's where we came up with that. And yeah, we from the very beginning, we have said, and poor Chris has listened to this, I don't know how many times, because he was really pushing us early on to pick a first project. And I really resisted and dug in my heels on that, because we feel super strongly that this is about building a community investment ecosystem. And if all we do is this one fund, like that wouldn't be success for us. It's really, we want to, like, my goal is eventually we have a second fund and maybe a third fund, and we start to see others in the community building out products and tools. That may be a really long-term goal, but yeah, this is, I think this is kind of the floor, and that hopefully there's a lot more to go until we get to the ceiling. So hopefully that answered that question. How will you avoid loaning?
Oh, and feel free to come off mute, everybody, since we do have, another 5 minutes. I'd love it to be a conversation since we've got a smaller group.
Yeah, I think this Anne's question about, who we're investing in, we're really mindful of, outside, more predatory, folks coming in and flipping. That's been a huge part of our conversation around the Jumpstart program. And that's where I think the community governance model is key. So, having people from communities making the decisions and having that be part of the due diligence and review process. What is your commitment to this neighborhood? What are your connections here? We also hear from a lot of folks who've had family members who have had to leave because they get priced out and they want to come back. So they may not be a current resident, but they have history, they have connections, they have bonds there. So I don't think there's like a perfect, line of eligible, not eligible, but I think it's going to be an important consideration in the decision-making processes.
Yeah, it also strikes me that the properties, maybe you need some non-predatory person with a predatory investment background. I have some friends who were in it and suddenly saw how evil it was and are trying to do better, to come in, walk around and say, you need to get that property tied up because the bastards are coming for it, right? And you need to, and you need to see how you can protect this particular block because some nasty's going to want it. And that seems to be a really high priority. Locals may not even know what's valuable and what's not, right? From a predatory viewpoint.
Yeah, well, I know that what we're seeing is the predators, including some very large local institutions, have private real estate advisors who are literally running around doing deals, and you don't even know the building wasn't officially on the market.
Exactly.
Right?
Yeah, exactly.
And so like that's literally probably 10 of the latest commercial real estate sales in Olneyville, where all the one nonprofit healthcare organization, they ticket, raise buildings, and just put in parking for their facility.
Yeah, that's very common, and they won't even file their real estate purchases until they've broken ground. Literally, I mean, we're finding that around here that you just they intend to do harm, they plan to do harm, and they're trying to be under the radar, which again means maybe you need to have a monitoring system where, especially if the buildings are owned by local people, that you just develop a relationship and you say, listen, If somebody comes to you and tells you they want your property, come to us first, please.
Yeah. Yeah, exactly. And I think that's when it does work. I think that is how it happens. With some of our local CDCs and community-minded folks like Anne who are on the call. Oh, Nancy.
Hi.
Hi.
This is fabulous. Oh, Jessica, this was a boost. So there's the Marion Cheek Jackson Center, and in Chapel Hill, North Carolina, I'm in Gainesville, Florida. We had them come down because there was a unique situation there that may be valuable in all this. So the historic Black neighborhoods around the university were getting bought out, and all the things you've just been talking about. And Self-Help Credit Union became a repository for a $10 million 10-year loan. I think I'm sorry, I've got construction going on at 0% interest. So that there was a $10 million pot being held at Self-Help. And then every block in the neighborhoods identified a leader. They had a committee that mapped, I'll try and go in another room, that mapped every property in those neighborhoods. Who was it in jeopardy, or was it owned, or what was going on with it? And then they could scoop it up faster than these predatory people.
That's great.
And hold it and just have it held. And then the neighbors would get together and say, well, would this be more appropriate for, there's a young family who needs a house like this, or, elders, or this could be a duplex. So the community made the decisions about what to do with that property. And it was one of the best and most successful examples of this kind of work that I've ever seen. So anyway, I just throw that out as an idea of engaging and finding a way to if you have a local CDFI, or a way to get up that pot that could just jump and hold.
Yeah, thank you. I love that.
Add a twist to that. If you have a local community college, if you have a local high school even, you can get a group of students doing some of that property mapping, and it will give them a career path for life, right?
That's a great idea.
And we don't think to do that, but I've been involved in a lot of different places where we grab student interns for things. And, it used to be that they were all the affluent folks whose parents knew they should be student interns, right? And we started going, well, this is a bit unfair, right? It's all we get is people that don't need this job. And so we went out and did some looking in the community colleges, in some of the high schools. And we got some really talented people who just needed somebody to say, you just don't have to be stuck in a dead end job to stay in this community. Here's a place for you to start. And we just found that incredibly helpful. So look to your students. Sometimes you can actually get them, particularly at a community college, course credit for this.
Those are
Yeah,
great ideas.
they are wonderful. We utilize that with at University of Florida, one of our professors does sustainable development, and she gets interns who get their hands dirty and they get out there and work. But yeah, we're starting to look for ways to have paid internships for community members as well, for youth, and develop youth leadership as they go through other programs that we have. But our community college is getting really engaged and good at that too.
And at the high school level, you need to get these kids early. A lot of them will never even think of themselves as being college bound, right? Because nobody thinks they're going to do anything but low end retail, or the lowest end of of the blue collar, right? And for somebody to come in and say, well, we don't think that's true. How would you guys like to get involved in changing your own life? You know, nobody tells kids in these environments that you can change your own life. And waiting till college is way too late.
Yeah, and I think real estate is a really, sorry, Jen, is
Oh,
is
go
a
ahead.
great, it's a strategy. Not everyone is going to go to college or should go to college. And I think real estate is a way that people have made very good livings and taking care of their families. And so it's very much aligned with the mission. And I'll stop there, sorry.
No, I just want to jump in. We can continue the conversation, but I know everyone is always like, oh, I got to go to my next meeting. So just want to remind you that I'm going to follow up with you by tomorrow with a recording and some of the links that Jessica shared with us. I'll get your slides if that's okay as well. But definitely, please come to our next Local Leaders Roundtable on April 11th. It'll be a Thursday. It'll be at 1 o'clock, and Michael Schumann will join us to talk more about these innovations that are happening around Move Your Money Month. So the whole month of April, we're talking about investing local, banking local. So no matter where you're all at, I hope that you'll join us. But again, we still have a few more minutes. I haven't heard from some people, so if you want to chime in with any questions or experience, please feel free.
Or not. I will quickly say the CDFIs, I'm so glad someone brought that up. If you have a CDFI, that's fabulous. And I definitely encourage partnering. We did not have we have 1, 2 CDFIs that do very specific things here. And so it wasn't an opportunity for us. But that is part of the ecosystem that we're looking to build too. So I'm so glad somebody mentioned self-help.
Thanks
Thanks,
again,
Jen.
Jessica. Thank you all for being here and adding your ideas. Thanks, Mom and Dad, for being here. Thanks, Chris, for being here too. If you want to leave any words of wisdom. But again, this is hopefully just the beginning, us learning from Jessica and all of you on this incredible journey.
Yeah, my
So,
words of wisdom are find a Jessica David in your neighborhood. That's the best thing I can tell you. So
yeah,
that
that makes a
definitely
whole lot of sense.
takes a passionate champion, and Jessica is certainly that. It was a pleasure on behalf of NC3 to work with your team, and we're excited about next steps for sure.
Yeah, and really, NC3's handbook is like a perfect place to start. So, and they're also much more accurate than many of the things I probably said. So.
Cool. Well, have
Thank
a
you,
wonderful
Jen.
rest of your
Yeah,
day,
thanks,
everybody.
Nice to see you.
Take care. Bye-bye.